So welcome. Today we've got Jeremy here.
Hi.
And we're going to be talking about personal balance sheets. Now this really, Jeremy, is kind of the basis for all personal wealth preservation and accounting, basically, isn't it?
Well, yeah. I mean, it's really obvious and simple, and I hope people don't find it patronising. But in business, if you want to improve something, you have to measure it. They say you can't manage what you can't measure. The other phrase I really like is everything measured improves. If you pick a metric within a business to focus on, that tends to be the thing that gets better. So if you focus on how many units you sell, that's the thing that gets better. If you focus on gross profit, then that's the thing that tends to improve. So just like anything, you have to pick a good metric. And I think particularly entrepreneurs tend to lose sight of their own wealth, and they tend to focus a lot on their business activity, believing that's where the wealth is going to ultimately come from. But if you treat yourself like a business, then basically everything gets a lot easier. So I always recommend keeping a really simple balance sheet, and it's just an Excel spreadsheet. It's nothing too fancy.
And what would that look like in terms of the actual Excel spreadsheet? I mean, step by step, how can somebody actually create that?
Yeah, so there's an example I can put available on the website for people to download, which is just the one that I use. And basically, you just have a list of all of your investments. Now, what normally shocks people when they come on my Harbour Club course, and I just do a little bit on wealth, is I normally say that on your balance sheet you shouldn't include your business or your private home, the home that you live in.
Important. That's a really, really valuable point there, because I think a lot of people get sucked into believing that their own personal home is part of their net worth.
Yeah.
Business, that's quite unique.
Absolutely. The thing I hear a lot is, my home is my pension, so I don't need a pension.
Yeah.
And, my business is what's going to create the value going forward. There's a couple of really important points here. One of them is if you stop paying your council tax or your property tax, see how long your home is your home. It's not going to be for very long. The other thing is your business. Business can be very temporary. It might seem like everything is going really well and you're having your best month ever, but Google could do it for free tomorrow, and then you can find yourself in all sorts of problems. So really, until you've sold a business and capitalized and invested that capital, that's not part of your investment. So really, if you want your wealth to grow, you have to measure it. You have to, for a start, you need to know where you're starting. What do you actually have, and then add to it on a consistent basis and on a regular basis.
And so in terms of, I know that a lot of people do a sort of very strategic, allocation of their general income. So say you're earning, £5,000 or £10,000 a month, splitting that. So as soon as it hits your account, it gets split into a number of different accounts. Is that quite a valuable strategy in terms of then managing your personal assets? You know what you've got to invest every week or every month, or
yeah. I mean, so personally, no, I don't do it like that. I know that's one of the models that people use. My goal has always been, and I think we'll come on to another video at some point around goal setting, but my goal has always been that your first goal should be that you need to live off your investment income so that you can invest your income. So forget about splitting bits of your income into investment. You should be able to invest all of your income whenever you get it, week or month, because your investment is already giving you enough income to live on.
So if you're
there's a process to get to that point.
Right. Okay.
But really, you have to try and get there as soon as possible. Otherwise, it's
so if you're a consultant, business owner, entrepreneur, perhaps a doctor or someone who earns a fairly significant income, the goal is to get all of your assets to provide the same income, and then invest every single penny that you actually earn from your daily kind of role. Was that what you're saying, basically?
Absolutely. Yeah.
Okay.
Yeah. And so there are a whole range of income-generating investments that you can make, from buy-to-let properties to bonds to high-yielding stocks. A whole range of things, and it's a question of getting the money from your pocket into those kind of investments, largely because then you can't spend it, and then live off the income that they generate.
Makes a lot of sense.
So a first thing to perhaps put on your personal balance sheet would be, what is that level?
Yeah.
If you really whittle it down to the bare necessities of paying your rent and all those kind of things, food and everything else, how much do you need per month? And then looking at the range of investments that you could invest in, how much do you need to invest to get there?
Yeah.
I mean, at the moment, you can buy leveraged bond ETFs that give you 9 or 10% return. People can argue about the sustainability of those sorts of investments, but we can come on to that on another conversation. But if you work around that kind of 7 to 10% return in this current,
keep
this
it
current
really boring.
January, whatever it is,
Yeah.
February 2015 time, then that's still not a bad thing to do. So how much do you have to have invested in order to generate that level of income? And then all your income that you produce from your business can be invested 100%.
Fantastic. I think that's a really sort of valuable kind of summary there. And I think just to summarize, basically, guys, as a step-by-step, get your entire life on a balance sheet. Every single penny that comes in and goes out, get it on a balance sheet. You should be doing that anyway. And then really focus on what is it that you need to generate on a monthly basis to actually live. What would that look like in a really boring 6 or 7% portfolio, i.e. how much do you then need to own in assets to give you 6 or 7% that matches your monthly income? And then we'll come on to another video where we'll talk about goal setting and how to actually achieve that. Jeremy, thanks very much.
No problem.